Afternoon traders, Simon at Kairos Capital Markets with the weekly review of AUDUSD, pound yen and euro dollar. So we are looking at the DXY at the moment, and we're still in this short squeeze of a range. I'm still waiting for some decent form of breakout. I know it's broken the trend line, but this daily 50 would be a concern to me. Purely because it's been tested once and twice very recently and kind of kissed it here as well. So I'd expect it to kind of give us some aggravation. If it does break down, you see we've seen here it breaks down and come back up again, then break down again, and it's come back up, then start testing itself again. So I would be a bit concerned, but we got a good a lot of resistance at the top here between 97 97.5, so that's still really what happens throughout the week, this week leading up to Christmas. Now we do have on the US dollar index, you see this one here, we haven't broken the trend line or the daily 50 EMA, and we've slowly grind up. You can see here we actually had a test of both the key level, the trend line, and the daily 50 EMA here as well. So it has actually tested it and rejected it as such, although not done a very good strong rejections in the move up afterwards. So we're just going to have to wait and see really what happens. Like I said, this is definitely a concern here. If you are short the dollar, I wouldn't add into my position now. Again, I won't go long the dollar because you haven't really got the strong rejections. It's just kind of bounced off and just not really moved up afterwards. So they're the things to keep in mind for this week. They are. So what's happening with the Aussie dollar? So ironically, the Aussie dollar had a bearish week. It has all 5 days been bearish, and it has stopped, ironically enough, at the daily 50 EMA again. So for me, I would just be, see, for me, there's not a very good trade there. The key level was here at 717. You zoom out, there isn't really any key level where we are now. It's always been 717. So there is a trade that looks kind of good on the intraday charts, but I don't think the daily is that great. I'd rather wait for a pop up to actually see that. So let me show what that looks like. And for me here, it's this area here on the 4-hour chart, 72, spot on. You've got multiple tests here you have, and you see here now, you've got a little mini double bottom, nice little dojis, this, that and the other. But I want you to notice something here as well. The bearish engulfing candle here was a higher volume, and this low volume rejection doesn't actually give me any significant like confidence that this would rally back up after. So I think that could actually be a bull trap just now, just by looking at the daily chart, and this doesn't give me the confidence there at all. However, if you do look at on the 1-hour chart, personally myself, you got a little mini range here, a little box here being traded at the moment, so it's around there. So I'd look for maybe a break and retest of the box, or at least this 1-hour 50 EMA before I traded it. If the daily was far better quality, I'd happily take the trade there, but I'm not happy with the daily chart. I don't think it's the greatest in the world, and I don't want to get involved with that, you see. So that's just my warning there for the moment. So obviously, where do you think it goes next? I think if it pops down to 717, then you got the daily 50 contend with. I don't like this trade, so I'm out of this one. Euro dollar, again, very similar but the inverse way. We failed to break this daily 50 multiple times. We have notice how the volumes as well, they started picking up a little bit. We've been rejected, so it's not really what I think is great. 1.14 area has been holding up quite well, so it's one of these things you got to be careful of. You could draw a trend line like that, something like this, trend line like that, just so you got a rough idea where you break back down again. But again, if you come down to 1.13, you're not really bearish either, so you're just going to be trapped. And this trap is obviously shown again on the DXY. On the lower time frames of the euro dollar, one thing I have noticed is this bearish engulfing candle on the 1-hour chart was on super low volume. So that again just implies that bearish engulfing candle isn't really valid. And again, we're going to come down to the 1-hour 50. We've got the 1.138 area, which on the 1-hour chart has in the past been key. So I'm waiting to see what happens there. My order, obviously my trade from the week before, we still remained in it, so I'm about 1% up at the moment. But like I said, it's a trade I really shouldn't have been into, so I will just monitor this and see how it reacts later on. Let's see what we got here. There we are, the 4-hour chart to show you here. This is what my concern is. Multiple rejections of the 1.14, 1.142 area. Multiple rejections all the way through. So I don't like this. Doesn't give me confidence. I would not want to enter a trade here purely because of the amount of rejections we've had there. So for me to trade this, it's a break and retest of the daily 50 EMA. That is paramount 100%. As you can see, 1, 2, 3 tests there, little kisses there, the 1.14. So like I said, pop up, pop down. That there would be my ideal trade. That is my ideal trade there, and I'll take that definitely to 1.157 with no question whatsoever. That's what I'm waiting for on this pair. Pound yen. So pound yen last week, I did say there could be a possible trade coming up, but again, with these types of breakout trades on the intraday, you need a good daily chart. So if you notice, this is this candle here was obviously Monday the 2nd of December. So I'm going to show you what it looked like. It looked like that on Monday. Now for me, that's not what I say is a test of 144. I need to see the test of 144 on the daily. So I need to see some deceleration. And the day after that, we had that. That's why I waited one more day. And to show you what happened here, this is where the traps come in, you see, guys. If you see here, we've got the 144.2 area. We had a bit of deceleration. Looked like it's going to come back up again, but it didn't actually do anything and just broke down massively in the afternoon on the 4th of December. And then we just traded around this area again. So for me personally, the 4-hour 50 EMA is showing its significance. If we come back up, we went long now. You can go long into the key level, long into the 4-hour 50. And obviously you're going to go long into this this area here. So it's not looking great in my eyes at the moment. I'm not interested in this pair now at the moment. It did look bullish last week, but it doesn't concern me no more. It's not really something I like. Like you said, you can see there's a floor here. But again, though, with the if you're going to trade the pound, you've got the Brexit vote with the government on Tuesday. So I would be very, very careful to trade the pound. In fact, I would not trade it at all, unless of course you love volatility and love gambling, then hey, be my guest. So now Bitcoin, I was looking for a move up to 6,000 overall, and all we've had so far is just a little bit of a move down. Now I did say last week a double bottom of some sort would be what I'd be looking for. I won't go long straight to have some bullish structure, and what I see here is something of bullish nature happening. We've got this high volume low test just below the key level here, but we did just plot that in randomly as a it looks good there. So yeah, we've got this low test doji candle, high volume, and then we've got a little low volume, low candle, small candle here. So for me personally, there is something forming here, and I have it drawn out as on the 4-hour chart a falling wedge. Now, for me personally, that's what it looks nice here. You could just take the trade there if you really wanted to. I think it's a bit naive to take a trade like that straight away. And the other thing as well, you are hoping for the breakout, everything to happen. Now, let me look at the weekly chart for you guys as well. I've not seen the weekly chart yet. Notice how this, I think this is what you call a trick. This bearish engulfing candle is of a lower volume. So for me personally, this is where people start going, hey, it's broke to the downside, let's go short. And normally it would rally up back into the range again. So for this low volume candle, be bearish, you want to confirm that, and all the confirmation, the volume actually comes out on the doji. So to me, that's actually a buying candle, not a selling candle. Then the 4-hour chart, I would say the 4-hour 50 EMA would most likely be broken, although we're in a pattern, you see. So that's why I think once we do break out, we'll break out quite nicely. This is just a very short-term trade. Again, you can target this kind of level here for 10% if you wanted to. The other thing as well on this is the 1-hour chart, and this is why I'd say wait for this chart to change its trend. This is the most safest point you can do. So effectively, you want to break up and you want to come back down again to test the 1-hour 50 and this downward sloping trend line. That will give you a little mini double bottom on the 1-hour chart as well. That to me is quite a nice little trade, and that then should move up quite decently, well, to at least top of the pattern range up there. It would move up there to about 4.4, 4.6, like that. That's what I'd expect to see. That's the safest trade to take, that is. You may want to just take the breakout trade. Again, look for high volume there as well. Look for volume breaking out this trend line. If you notice here, the bullish engulfing candle here was high volume, and again here it was the highest volume of the day, that bullish engulfing candle there as well. So the price is moving up nicely at this present moment in time, and I'll just wait for the break and retest to confirm what's happening. Okay guys, I hope you enjoyed it. Any questions, give us a shout. If not, speak to you soon and take care.